Morning, everybody. Thank you for joining us this morning for the Downtown Westfield Small Business Virtual Town Hall. Most of you don't know me, but you will. My name is Bob Zuckerman. I am the brand new Executive Director of the Downtown Westfield Corporation, and I have the pleasure of hosting you this morning. I started actually last week, and this is kind of unusual times to begin a new position like this, but it's unusual times for all of us. So I'm here working from home, and I'm joined by my staff members, Nikki McCullough and Beth Brenner. And soon we're going to be hearing from a great panel of experts who are going to help answer some of your questions that you've been having about how some of the economic relief programs that are available both from the state and the federal government side. Just a couple of quick announcements. Well, first of all, happy Passover for those of you who celebrate. Happy Easter coming up for those who celebrate Easter. This webinar will be recorded. So we're gonna, once it concludes, we will get it up on our website today and make it available for anybody to watch over again who could be here with us this morning. If you have questions, and some of you will, there's a Q&A button on the bottom of your screen. And when you press that Q&A button, you can submit a question. A couple of you have submitted questions ahead of time, which I will read later. I will moderate the questions for the panel at the conclusion of the seminar. And then we will get started. I just want to introduce real quickly, just want to announce, so we're going to have David Margulies, who's the Regional Director of the Small Business Development Center at Kean University, who's going to talk to you about what they do and how they can help small businesses throughout the area get through this crisis. We'll have Paul Ceppi, who is the Managing Director of Business Development for the New Jersey Economic Development Authority, and then Tom Jardim, who is Westfield's Counsel, and his colleague Scott Salmon. They're both from the law firm of Jardim, Meisner, and Susser, and they're going to talk about the federal programs and some of the programs that can help individuals in terms of employment issues. So first, we also have a special guest, but I'm going to let our next speaker introduce that special guest. And our next speaker to give her remarks is someone who's I've been following on social media, has been doing an outstanding job keeping everybody informed throughout Westfield on programs and on efforts to help and get us all through this. So it's my pleasure to introduce you to Mayor Shelley Brindle.
Thank you, Bob, very much. And thank you to all of you who are tuning in today and to our very esteemed panelists. I'll add one thing to the bio of Tom Jardim. For those that you don't know, he is a former mayor of Westfield as well. So he brings that perspective to the role today. So thank you, Tom, for being here. And really, for those of you that haven't had the opportunity to actually meet Bob or get to know Bob, we are incredibly fortunate that Bob is the new Executive Director of the Downtown Westfield Corporation at this particular time. Bob used to be the Business Improvement District Executive Director at the Lower East Side during Hurricane Sandy. He then was in the same position for the South Orange Village Alliance, where he has really been instrumental in the resurgence in South Orange. So we're incredibly fortunate that Bob is here. And not only that, he's also president of Downtown New Jersey. So he brings the resources available to that organization, as well as, very importantly, best practices on what's happening in other towns around the state. So thank you, Bob, for organizing this, and thank you for being here. Look forward to having you in an office in person when we can all get together, but thanks for that. I really don't have a lot to say other than to reiterate the fact that as mayor and as a town, that we are here for you, for all of our small businesses. You may not be familiar with the nonprofit we started, We Love Local, which was raising money from the community through the Westfield United Fund to be able to get in the hands of local Westfield independent businesses in advance of getting any kind of federal state stimulus in the hands. And I'm just unbelievably proud to say that we've raised almost $200,000 in just over 2 weeks. We've already distributed $110,000 to 85 businesses grants range from 500 to 2250. It's not too late to apply. We will be closing down the fund shortly, and hopefully in advance of some of the stimulus money hopefully getting in people's hands. So if you haven't applied, please go to westfieldunitedfund.org and submit a very easy application, and you can check your eligibility. But we've already heard from many of the local businesses how important it's been to actually get cash in hand right away to keep people employed or their businesses running. So just want to make sure that you're well aware of that. And we are very lucky, and I get the privilege of introducing Congressman Tom Malinowski. I can't say enough about how proactive the Congressman has been through all of this, not either him directly or through his staff, making sure that our town has the information and resources that we need. And you'll find, I think, after he speaks today, how incredibly well-versed he is on what's happening at the federal level, and the questions he's gotten also through other municipalities and counties and so forth that he's spoken to in the last week. So with that, let me pass it on to the Congressman. Thank you for being here. And obviously we'll be around to answer any questions you guys might have as this moves forward. So with that, I'll hand it off to you, Congressman.
Thank you, Mayor Brindle. And thanks to everybody for joining today. We are in an extraordinary situation. Doing our very best right now to make it possible for our public health system to respond to this terrible crisis. I think that this remarkable collective action of staying home and shutting things down is working, but it is also taking an incredible toll on our economy and our livelihoods. And our priority in the Congress and the federal response has been to try to ease that burden, to make it economically possible for all of us to follow the public health advice that we are getting. As you all know, we've passed a couple of major pieces of legislation in Washington over the last few weeks. They've been referred to as stimulus bills, which is not precisely correct because we're not stimulating anything. We're just keeping the economy on life support until we can come out of our homes and resume our normal lives. My view at this point is that this period is going to last a little bit longer than many people hoped. We want to get this right. We do not want to resume normal activity so quickly that the coronavirus rebounds, which would not only have another tremendous toll in human life, but another great toll to our economy. So that just it elevates the importance of getting the economic response right so that when we do come out, we still have an economy to come back to. The guiding principle of everything we have done is to try our best to maintain the relationship between employers and employees in our economy. Yes, we've plussed up unemployment insurance, which we have to do because we don't want anybody to fall through the cracks. But the best possible outcome from my point of view would be for our businesses, particularly our small businesses, even if their doors are shut, to retain their employees so that when it's possible to resume normal activity, we can do it as quickly as we can. And so the last bill in particular, the CARES Act, which Congress passed, includes a number of provisions that are designed to facilitate that. A couple of them don't get as much attention. We put in refundable tax credits for companies that grant paid family and medical leave to their employees. There's an employee retention tax credit, which some companies may find attractive and useful. But of course, the centerpiece of what we did was this Paycheck Protection Program that provides loans of up to $10 million to businesses with up to 500 employees, loans that are 100% forgivable if the business retains all of its employees through this crisis. And we want to make it possible for everybody to take advantage of that. It's a huge program. It took us a few days to write the bill and then a few days to go and tell the banks to moved $350 billion. We are now on the morning of day 5 of the rollout of this program. I was on the phone yesterday with the Secretary of the Treasury and the Vice President. They told us that they'd gotten about 90 billion of the initial tranche out already. But I think we all know that the day-to-day experience of our small business owners who've been trying to take advantage of this has not been entirely smooth, to say the least. Some people are doing okay. Other people have gotten the runaround at banks. We have particular problems at banks like Wells Fargo, which are being addressed right now. There was not a lot of good guidance for banks in the early days of the program, and probably still isn't enough today, as I'm sure we'll hear in this conversation. And then I think some banks didn't quite get the memo that this is not optional, that this was not another opportunity for them to market their products, that this was not about, this is not a program where they were allowed to treat their existing customers better than a small business that they'd never dealt with before. And so we are both trying to provide better guidance to the banks, but also making it clear that they have essentially been drafted and they have to do this. We've also taken some steps to strengthen the program with the Federal Reserve backstopping these loans. And this week in Congress, we are negotiating an additional piece of legislation designed to improve the program further. There will be more money. If the House of Representatives gets its way, a significant share of that money will be set aside for smaller community-based banks that I think are in a better position to work with the very small businesses that we want to see this money going to. We do not want this program to reinforce existing inequities in our economy. This is supposed to be for everybody who employs people, large or small. So that's where we are right now. I'm happy to take comments and suggestions for the next piece of legislation, and to take any questions that you guys may have about what we've put into place so far. I benefit from these sessions because you guys tell me what's going on out there, and I can use that input to try to shape our work as we try to improve this. We know we don't have a lot of time, so I very much need to hear from all of you. With that, I will step back and wait for your comments and questions. Thanks again.
Thank you, Congressman, so much for joining us this morning. And we appreciate you staying on with us as long as you can to engage with our Westfield small business owners. Now I'd like to turn the program over to David Margulies. David is the regional director of the Small Business Development Center based at Kane University. He will tell you about the Small Business Development Center program and how his center can actually assist your businesses through this crisis. So, David, the viewing room is now yours.
Good morning, everybody. I'm Dave Margulies from the Small Business Development Center at Kane University. Small business development centers in the United States, there are about 1,000 of us throughout the country. In the state of New Jersey, we are headquartered out of Rutgers Graduate School in Newark, and we have 12 centers throughout the state. Union County is fortunate to have its own center located at Kane University. We are primarily funded by the United States Small Business Administration, and our purpose is multifold. One is to help nascent entrepreneurs go into business. So people looking to go into business to start businesses, we help them set up their LLC. We'll help them get going. Another thing is for us to give seminars on important business topics to small business owners, which we do throughout the year. And the last thrust, which is the one I'm here to discuss now, is to help small businesses grow. Part of helping small businesses grow is to help them with marketing, with business plans, with getting financing. and also with technical assistance on other issues. So one of them is this whole CARES Act. The CARES Act, which is the Coronavirus Aid, Relief, and Economic Security Act, is relatively new, but we've been working with a lot of clients. If you take a look in the chat box, I've put information on how you can reach out to the Small Business Development Center. From a federal perspective, we've heard, the Congressman had mentioned that there are a lot of plans that are going on. And I know Paul after me is going to speak about New Jersey plans. And after that, we're going to hear about the federal plans. But there are 5 main thrusts of the plan that affect small businesses and might affect you. One is there's something new, a contractor, gig worker, pandemic, unemployment. Normally unemployment is for those who pay in for employees, but now it's been expanded by the federal government. So that's something that might be of interest. Another thing is the loan program that's directly with the SBA. That's applied for on SBA.gov, and we'll hear about it later. And it comes with a cash advance grant of up to $10,000. Another one is the wage subsidy loan and grant. That we've heard of the PPP, or payroll protection. So that's the one that we're going to apply for through banks, whereas the one before, which is the EIDL, the Economic Injury Disaster Loan, is applied for directly with the SBA on SBA.gov. So the wage subsidy we'll hear about a little bit later. There's also an SBA 6-month loan relief program for outstanding SBA loans. So those would be 7A loans, those would be 504 loans, and those would be other SBA guaranteed loans. And then there's a worker retention tax credit as well. So those are the main federal programs that will be discussed later on today. Again, the SBDC can easily be contacted. Go to our website, which is www.sbdckean.com. You'll see all the information. You'll see how to register with us. It's a simple 1 or 2 minute a U.S. Small Business Administration client intake form. We're here to serve the community, and we'd be happy to work with you. And thank you.
Thank you, David. I just want to say we just heard from Anne Marie, one of our participants, who wanted to give you a testimonial. She said she participated in the small business counseling at Kane this week. Practical advice, well worth the time spent. Should have done it before. Before this crisis. So you have one testimonial there already for your work.
Well, thank you. I will also tell you that one of our senior consultants, Vanessa Schwartz, is a Westfield resident, and she's also on the call with us this morning. So she'll be listening in as well. And we're here to help small business owners. That's what the SBA charges us with. And as the primary grant supporter of our services, which come free and confidential to the public, that's what we're here to do.
Terrific. Thank you, David. And we look forward to continuing to work with you. This one last question. This is all free of charge for the businesses, correct?
That is correct. Our services are free of charge. From time to time, we may have a seminar that we might have a nominal fee for, but our one-on-one mentoring with clients is grant funded by multiple, the majority of which is the Small Business Administration, the U.S. government.
Okay, great. Thank you, David.
Sure.
Questions are starting to come in. Our panel of experts are going to be able to answer those questions after they've spoken. There was one specific question for you, Congressman, so I'm going to just read that, and then we'll go to our panel. Congressman Malinowski, good morning. This is Thomas Nastasi with Shoreline East Construction in Westfield. He's very concerned that I am working day to day to financially survive. Santander Bank has yet to issue the application for the PPP. I'm almost at a crossroads of unemployment for my 3 employees or holdout. What are your thoughts on the timeline for banks, Santander in particular, in providing the application and then to actually see the funds. I appreciate your time.
Yeah, thank you so much for raising that. And my first reaction is that pisses me off. And that I will, we will reach out to that bank because it's just not acceptable at this point not to even have an application out. You know, this is something that on the one hand is an enormous program, very, very complicated. It's being managed by human beings. We are slow, we make mistakes. It's typical for things to take more than a few days of this size to roll out and become smoothly functioning. On the other hand, we do not have time. This is not a situation where we have 2 or 3 months for everybody to get their act together, because small businesses and their employees are suffering right now. And I'd rather make some mistakes early on by rolling things out too quickly than to force businesses like yours to go under because we have taken too much time to get it right. As I mentioned in my opening remarks, I see this as a war in which banks have been drafted. They are working for us. They are lending our money. We're about to give them a lot more of our money, and they need to be part of this. And if they need guidance, they should demand it. But they can't be turning people away. So, you know, all I can say is let us look into this. If you're willing to share your contact info, an email address, a phone number in the chat, I will have a staff member get back to you when we find out more, or maybe they'll reach out to you and get more details about your case, and we'll see what we can find out. In the meantime, I see, you know, you're wondering if your employees should go on unemployment. It is the case that if you do have to let people go and they go on unemployment, you can still bring them back a week from now, 2 weeks from now, and benefit from the PPP. And I'm sure Scott and Tom can go into the details on how that would work. So it's not all or nothing for you at this moment. But I just wish that you wouldn't. You know, I wish it were easier, and that that you were getting these questions answered by your bank.
Great. Thank you, Congressman. Okay, now we're going to turn it on. We're going to turn it over to our next panelist, Paul Ceppi. Paul is a managing director for business development at the New Jersey Economic Development Authority. And Paul, the floor is yours.
Hi, good morning, everyone. Thanks for allowing me to discuss a little bit about some of the efforts and initiatives that the EDA has put forth with the spirit of trying to get some dollars into the hands of small businesses. It's an incredible time right now that I don't think anyone has ever experienced. But I'll do my best to give a quick summary of some things that we've done and will do in the coming weeks, coming days. The authority has been around in existence for 40 some odd years, providing companies with assistance to help them grow their business. We've taken those practices and applied them to programs that are specific to the COVID related pandemic. This past Friday, the authority released the grant program. As of 2 nights ago, we had 27,000 applications that have come in. It's a small pool of resources. It's only $5 million at this point. The fund is over subscribed. We are asking folks, it is open until tomorrow. We are asking folks if they've got 5 minutes, and that's basically as long as it takes to complete the application or complete some basic data. So we can take that and try to digest it and see exactly what other companies and industries are being impacted and how, so that we can formulate that and take that information and formulate additional programs as we look to move forward. no one from, the governor, our CEO, and below have thought about the efforts that the EDA has done, being able to satisfy all the needs that the state needs, or that the companies need, I should say, as it's a limited amount of resources initially. The thought is, and what our mission really was to build an infrastructure and a program base that once federal dollars and or state appropriation were available, we'd be able to duplicate that effort and just refund those programs so we can continue the momentum in trying to get some folks some dollars. In that effort, excuse me, first call of the day. In that effort, 2 days ago, the CRDA, the Casino Reinvestment Development Authority, made a $2 million commitment and contribution, so to speak, to the grant program to help assist Atlantic County businesses. We're hoping that that catches, so to speak, and other resources are able to fund the program that might be dedicated to a certain geographic region, which will then enable us to then broaden the scope and net of that program. The grant program was originally set up to be for companies that were more retail in nature, were specific in NAICS codes of NAICS that started with 44, 45, 71, 72, 811, and 812. Again, more retail in nature. For companies that were had 10 full-time equivalents or less, and the grant would be up to $5,000. Again, not nearly enough to what folks mostly need, but hopefully something that can help them sustain themselves as they work through the process with obtaining other resources through the SBA and the like. The second program is a loan program. The Small Business Emergency Assistance Loan Program will be released on Monday the 13th. It's a $10 million allocation, allows for loans of up to $100,000 to cover working capital needs that companies have, whether it's payroll, rental mortgage assistance, utilities, taxes, insurance, etc. Things that you would need to ideally sustain yourself during this downturn, and then eventually be able to recover. It is a loan. It's targeted at companies that have $5 million or less in revenues. Company needs to have a commercial location. Home-based businesses at this point are not eligible for the program. Need to be in existence for at least 1 year. The loan would need to be guaranteed by anyone that's got a 10% or more ownership in the company, and at least one of those guarantors need to have a minimum credit score of 600 to be eligible. We'll also take a look at the company's global historic cash flow to help service the debt. We're looking at a minimum debt service coverage ratio of 1.0 to 1. Certainly you don't want to take a look at someone's a company's cash flow position today, as that would be unfair, frankly. So we will look at historical data to help make that determination. The first year of payments can be deferred. The first 5 years of the loan is 0 interest, and the second 5 years will be set at the prevailing rate of the authority's core programs, currently set at 2%, but in no instance would it exceed 3%, depending upon, again, what those times are. That application will be live on Monday. I did not mention yet, but I will now, and I've included it in the, I'm new to the Zoom thing, I'm not gonna lie, but I included it in the chat box or the chat session here. cv.business.nj.gov will list not just this program, but the other efforts that are going on throughout the authority and throughout the state. They'll identify resources through the unemployment system, over at Department of Labor. If you've got taxation questions, you'll be able to do that. There's an interactive chat bot that's staffed from 8 a.m. to 7 p.m. Monday through Friday, 11 a.m. to 5 p.m. on Saturday. This coming Sunday, they're off for the holiday, but then they'll be back at it again come Monday morning at 8 a.m. You'll also find a draft application for the loan program, as well as a guide that will walk you through the program to identify the resources that you need to, and information that you'll need to have when you get ready to apply. The application will allow someone to log in and out if you need it to obtain some information as you're working through the file. But again, if you'd like, there is a guide that's there now, so you would be able to identify what you'll need in regards to financial statements, excuse me, lease information, if that's the kind of relief you're looking for, and related materials. So I'd encourage you seriously to take a look at the cv.business.nj.gov. There is also an eligibility wizard, which would then help you identify resources that you would be available to receive, not just at the state level, but on the federal side as well. Those first two programs were targeted at direct resources from the authority. In its 40 some odd years of existence, we've made some great partnerships and have the ability to leverage resources out throughout the state. One of those ways that we do it is through partnerships with community development finance institutions. We've offered New Jersey-based CDFIs the opportunity to utilize EDA resources to build themselves a first loss reserve fund. Any lending institution generally reserves for anticipated or unanticipated, I guess you could say, losses that may incur when they look to make loans. That limits their ability to put additional dollars on the street. The EDA is looking to cover some of those potential losses that the CDFI may experience, enabling them to free up more cash to put that cash out onto the street. That initial allocation is targeted to be $10 million. That's anticipated that should yield at least $20 to $25 million of dollars going out to the street. CDFI institutions are, if you're not familiar with them, locally to the Westfield area, Union County Economic Development Corporation services your territory. New Jersey Community Capital is also a good one. These institutions have been around for a while. They understand what's going on. They generally, and I'm not just plugging those two for geographically is why those two came to mind. But you know, they generally have more flexible terms than traditional banks. So if you're having an issue or concern with your banking relationship, or potentially you're in business for 2 years and a bank wants to see you in business for 3, CDFIs generally have the ability to lend to companies that are still young in that regard. They'll set up programs with specific criteria. We're not going to tell them how to underwrite the deals, but the loans themselves won't exceed $75,000. They'll have interest rates south of 3.75%, and the loans won't exceed 5 years. So not the greatest of terms, but certainly pretty reasonable given the situation, and in comparison to what CDFIs typically lend, those will be relatively attractive. Another way for the EDA to leverage resources, I referenced our partnerships earlier. We currently have 24 premier lenders on our list of lenders that we actively participate with. We've done business with these folks a variety of different ways: participation loans, guaranteeing their loans. We've taken that guarantee program and put a little bit of a spin onto it, whereas historically we would be pari passu in collateral. We will now take a subordinate position to them to encourage them and get them hopefully a little more comfortable to provide capital. The guarantee program, we will guarantee up to 50% or $100,000 on a bank's loan. So if a bank is offering a $200,000 or more loan, we can guarantee up to $100,000. If it's an $80,000 working capital loan, we can guarantee $40,000 of that. Similar underwriting criteria in regards to the loan program, where we're looking at companies that are $5 million or less in revenue, have a commercial location in New Jersey, of course, and the debt service coverage ratio and guarantee aspects would still apply. One thing for any of the state-based programs, the company, will need to be current on all taxation and treasury obligations, as well as the Department of Labor. So we will be doing interagency checks to verify that folks are current on any and all obligations with our sister agencies, and be able to look to move forward. Another aspect, I mentioned earlier that the authority is an independent, self-supported authority. Generally speaking, our lights are kept on by fees that we generate through a variety of different programs that we administer. These programs will be fee-free. There will be no application fees. There are no closing fees associated with the grant program, with a loan program, or the guarantee program. Another program that the authority is working on is a entrepreneur support program. The governor had rolled out his economic development plan in October of 2018. One of the key pillars of that plan was the innovation economy and strengthening the tech and startup industries here in New Jersey, or reinvigorating those opportunities. Over the past couple of months, that investment and most of those companies, are funded by investments, or folks that are willing to take on or offer venture capital versus traditional debt. Given the volatility in the marketplace right now, those investors are kind of scaling back, and probably properly scaling back their investment or desire to invest in some of these more riskier type situations. To maintain that momentum, the authority is offering up to 80% guarantees for those investors to still maintain their engagement with the tech and the startup innovation economy. So that is one offering that we're still trying to do. That is a smaller allocation of $5 million of resources, but again, still very important to try to keep those folks engaged. The SBA program, the state program for that matter, are complicated efforts to try to apply for. Companies are generally good at what they do, but not necessarily great at doing government and bureaucratic laced paperwork. So we've partnered with 4 institutions that can help companies work through the SBA process in applying for funding. We're working with the African American Chamber of Commerce, the New Jersey State Veterans Chamber, Rising Tide Capital, and the statewide Hispanic Chamber to offer services to help facilitate people in applying to the SBA. We can get that confirmation, that contact information for those respective entities out through Bob, and you can funnel it out through your network. But utilize those services if you can or if you need to, because as some of the prior calls that I've been on, and is willing to help that the government folks are, including myself. Unfortunately, we need to make sure that the I's are dotted, the T's are crossed, and these folks can help assist you in doing that. One other thing that the governor has been talking about is having industry be patient with folks and the financial markets. The big banks. Hey, give your clients a little bit of breathing room, help them understand and work through the process. So the EDA's currently got about almost 400 loans in our current portfolio, and we are taking that advice certainly under advisement. And looking at our current portfolio and offering payment moratoriums to existing clients, offering extensions where possible, and issuing subordinations, all again without fees associated with them, as we need to maintain our current client base and make sure that they're comfortable in what they're being able to do. And if they're working with other lenders to try and get flexibility in their capital, why would we want to be handcuffing folks to be able to do, not allow them to do that? So we're trying to be as flexible as possible, but that is something else that we're doing with our current portfolio. Again, the key takeaway I think out of my presentation is to take a look at the cv.business.nj.gov site. You'll find a lot of information there. And certainly should be able to address most, if not all, of your questions. With that, Bob, I'm done with my piece.
Thank you, Paul. Paul, will you be able to stick around?
Sure,
to answer
absolutely.
questions
Yep.
after the next? Okay, great. In the meantime, if you could go into the chat when you get a chance, Some folks have asked for the link to the eligibility wizard. If you could put that in there.
Oh, sure. Yep. It's all on that CV site, but I'll repost it again so it's fresh. Yep.
Great, great, excellent. Okay, thank you, Paul. Now it is my pleasure to turn the program over to, as Mayor Brindle said, former mayor, current counsel for Westfield, Tom Jardim. Tom, the floor is yours.
Thanks, Bob. Good morning, everyone. Hopefully everybody can hear me okay. I'm going to talk a little bit about employment-related issues, particularly employment leave issues. However, before I do that, I'm going to hand it over to Scott to give you the good news, my colleague Scott Salmon, to give you the good news on the federal stimulus programs. These are pretty simple programs once you understand them. Before you understand them, though, they are pretty daunting things. So Scott's going to give you some good explanations of things. I've already seen some great questions come in, and I think Scott's going to address lots of those. So let me flip it over to Scott to go, and then I'm going to come back and talk about employment stuff.
Awesome. Thank you, Tom. Okay, so like Tom said, I'm going to talk about government relief and some of the things that have been covered by some of the other presenters here. So there have been three main bills that have been signed into law that relate to coronavirus and trying to get help to businesses and employees. The three of them are the Coronavirus Preparedness Response Supplemental Appropriations Act. That gave about $50 billion to the Small Business Administration. Then we had the Families First Coronavirus Response Act, and Tom is going to talk more about this in a few minutes. And then I'm mostly going to talk about the CARES Act. This is obviously the one that's everyone's talking about right now. It's the $2 trillion bill that was just signed into law the Friday before last. And so I'm going to go into detail about that because that covers two major programs, an extension of one, the Economic Injury Disaster Loan Program, and this brand new program, the Paycheck Protection Program, as well as, well, other people have mentioned, this enhanced unemployment package, as well as the payroll tax and tax credit programs that Congressman Malinowski mentioned. So the Economic Injury Disaster Loan Program, this is a long time program that's existed for a while with the SBA. They've now just essentially supercharged it. This is a traditional long-term low-interest loan, 10 years, 3.75% interest, up to $2 million per business. It can be used for basically anything related to your business. It's really meant, and it's calculated, the amount that you can receive is calculated based on approximately 6 months of operating expenses. But realistically, you can use that money for whatever you want. So for example, I have a client in New York City. Obviously we're not New York City, but they pay rent of about $47,000 per month, which that is by far their biggest expense. And so the Paycheck Protection Program, which we'll get to in a minute, that doesn't really cover what they need. They need help with their rent. And so for them, for example, it makes a lot more sense to file with the EIDL program. I have other clients who have business loans of 8% interest, and so they're planning on using their money under the EIDL program to get out from under those loans. They're going to use a lot of the money that they receive from it to pay them off. I believe someone mentioned the $10,000 advance. It's up to $10,000 that you can get when you apply for the EIDL program. The amazing thing about this is that, with one exception, which we'll get into in a minute, it does not need to be repaid. It is pure and simple free money. Even if you apply for a loan under the EIDL, you apply for the up to $10,000 advance, and your loan is denied or your loan request is denied, you still get to keep the $10,000. You don't have to pay it back. What that's meant for is an immediate cash advance. In theory, that is you're supposed to receive it within 3 days of completing the application. I've been told that the SBA is unsurprisingly behind on that because of the number of applications they've received. And so we're looking at approximately 10 to 12 days or so before you get that money. But that is by far the best thing about the EIDL program, is this immediate cash advance that you can get. Let's say you need to pay your rent, you need to pay some bill that's coming up. It's really meant for that. I believe someone else mentioned this as well, but for this program, for the EIDL, you apply directly with the SBA for it. And we have the link here up on the screen, covid19relief.sba.gov. The very first part of the application, it takes maybe 10 minutes to do. Then you'll hear back from them, from the SBA in a couple days, and they'll send you some more additional questions and things like that. And that part of the application will take a little bit longer, but still not particularly hard to do. It doesn't take particularly long. And you can apply for that now. There's nothing holding back from doing that now. The next program is the Paycheck Protection Program. This is obviously the one that's been getting the most talk. The purpose of this is to cover approximately about 8 weeks of payroll costs, plus your rent and utilities and other things like that. If you use it the way the government wants you to use it, it is literally free money. No, that's it. It's as simple as that. And in almost every instance, it is worth the time to apply or to try to apply. Even if you end up being denied for whatever reason, it's worth it to try and apply because it's like I said, it's free money. Now, how do payroll costs get calculated is one of the biggest questions we get. It basically includes everything that you pay to your employees, with the exception of your federal taxes. So your FICA, federal unemployment, those things are not included. But any wages or commissions or cash tips that you pay to your employees, your state and local taxes, if you have a healthcare program, whatever your business is paying towards their premiums, if you have a 401k match program, all that gets thrown in there. Like I said, with the exception of the federal taxes. The qualifier on that is that if someone is making, let's say, $105,000 a year plus all the other benefits, their compensation for when you're calculating the payroll costs, it's going to be capped at the first $100,000. But that's only for the wages and commissions and compensation like that. If let's say they're making $105,000, you're going to cap it at $100,000. But then you're also paying their paying for healthcare. You're giving them a 401k. All that stuff is going to get included. It's just the $5,000 over the $100,000 that's not going to get included. And if you use ADP, if you use Paychex or Gusto or Premier, one of those payroll processing providers, they've made it extremely simple. There's literally a button you could press and it'll spit out the number for what your payroll costs for your business are. So the loan amount for the EIDL program that I mentioned, that's calculated based on 6 months of operating costs. This is the loan amount here for the PPP is they take your average monthly payroll for 2019 and they multiply it by 2.5. So you'll look at how much you paid in payroll costs over the course of 2019. You'll divide it by 12, so that way you get your average monthly. That gives you 1 month, and then you're going to multiply that by 2.5. The reason they can have 2.5 is that 2 of the 2.5 is to get you to 2 months or 8 weeks, and then the 0.5 is meant to cover your rent and utilities. It may not cover all of your rent and utilities. That's the example I mentioned before about my client who pays $47,000 a month in rent. Not going to come anywhere close to covering that, which is by far their biggest expense. So if those are your biggest costs, then there's no reason you can't apply for both this and the EIDL, but that may be where you might want to focus more. Now, the other big question that we get about this is about forgiveness. I said that if used properly, it's free money. The program is technically structured as a loan. So if you don't use the money the way they want you to use it, then it gets paid back as a loan. It's 1% interest over 2 years that has to be paid back. If you bring back all the employees you've let go, or you restore their compensation to what it was before, then it's going to get the entire amount will get forgiven. So to break that down a little more, if between February 15th and April 26th, which obviously hasn't happened yet, you let employees go because you can't afford to pay them or whatever, because you've closed your doors, or you've cut salaries, maybe you cut salaries 50% just to keep everyone on the payroll. As long as by June 30th you bring all those people back, or you restore their salaries to what they were before February 15th, then you'll be fine, and the entire 100% of the money will be forgiven. So I think the best way to think of this, because if you don't, you don't bring back all those people or don't restore their salaries, then the amount that gets forgiven is reduced. So I think the best way to look at this is assume that if you bring everyone back and you restore everyone's salaries to what they were, it's going to be 100% forgiveness. That amount, 100% forgiveness, is going to get reduced pro rata based on each employee that you either don't bring back or that you don't restore their salary or compensation to what it was before. So if you have 10 employees and you decide for whatever reason, you know what, I had 10 employees on February 20th, and I only want to bring back 9 of them for whatever reason, and that one employee, their share of those average monthly payroll costs, the amount that's forgiven is reduced from 100% to the percentage for that minus that one person. If, let's say, you bring everyone back, but you restore their salaries to, let's say, 50% of what they were making before, then again, it's going to give the 100% forgiveness is going to get reduced to where the difference between that and what you're paying them in terms of your average payroll costs. Now, the applications for this opened on this past Friday. As mentioned a few times, it has been chaotic, to say the least. The banks didn't really receive their guidance and on how to administer this program until, well, they received most of it on about midnight Thursday going into Friday. So just as they were opening the applications, but they've been receiving more guidance since. So it's been a chaotic rollout, to say the least, as I'm sure many of you know. You can use any bank to do this. You can use any bank to do this. The SBA knows that they can't administer this themselves. They've gotten, I believe it's now over 100,000 applications for this. So they've basically enlisted every bank imaginable. They've also enlisted, I believe, Square and PayPal are about to open up their applications as well, even though they're not banks, but they are being considered as lenders. There have been obviously some issues with some of the specific banks. I know Bank of America got in trouble originally because they at first were only accepting not just customers, but people who had an existing line of credit or a credit card with them. They've since opened it up to all existing Bank of America customers. Wells Fargo had some issues at first where on Monday they tried to open up their applications, but then they were forced to shut down in about an hour or so because there were limitations on how many loans they could give out as a punishment for their 2017 fake account scandal. Those limitations have since been lifted by the Federal Reserve. So if you have a Wells Fargo account and you want to apply through them, you can now do so. And so we're going to see in the coming days, we're going to see more and more of these banks open up their applications. I know Congress has said that they plan on funding this, giving basically as much money as they need to make this program work. I know Senator Schumer and McConnell have said that. So I wouldn't be concerned at this point about money running out if that is the concern. And my last point about this is if you work with a small community bank, you are probably going to get better or quicker results than if you than working with one of the big banks. It's just been easier for the smaller banks to maneuver and deal with fewer customers. I'm not aware at this point of anyone, even the people who have had their applications approved, that have actually received their money. I wouldn't expect it, frankly, even if you got your application in today, I wouldn't expect the money from the Paycheck Protection Program to come in for, honestly, I would guess at least 2 weeks. It's possible it's sooner. Things are moving extremely quickly, but realistically, I wouldn't expect it for another 2 weeks at least. Okay, so to cover some other topics, we mentioned unemployment. Senator Schumer had a great quote about this, that this is unemployment on steroids. I think that is a great quote for this. It significantly increases unemployment and what's available to employees. So under the CARES Act, states are now being required to provide unemployment by an additional $600 per week for 4 months. That means that if you make less than $75,000 a year, or one of your employees makes less than $75,000 a year, they can receive up to 100% of their salary. The other big extension, big part of this is that it's extended to gig workers, freelancers, and as well as workers who have been furloughed, which means that they're not receiving a paycheck from their business, but they are receiving, let's say, their healthcare benefits or something like that. And then there's also been talk about the direct payments to everyone. I don't think we're going to be seeing the actual payments for another couple weeks as well. But the idea is that if you make less than $75,000 individually, or $150,000 if you file your taxes jointly, you're going to receive $1,200 per adult, with $500 per child for qualifying households. There's a phase out for above $75,000. I think it's about 4 cents a dollar that you make over $75,000, which means that at about $99,000 of income, it's going to phase out to zero, and above that you won't get a direct check. That's the idea behind it. The only qualifier on this is that you have to have filed your 2018 or 2019 taxes to receive the money. So if you have not yet filed your 2019 taxes, and that's going to put you over the $99,000, let's say in 2018 you made less than that, I would advise you should talk to your accountant, your tax professional, but I would probably advise holding off at least until the checks have been cut to receive the money. And finally, Congressman Malinowski mentioned this, but there are some tax credits available. They are meant for people, for businesses who either are not or cannot apply under the Paycheck Protection Program. They're meant to incentivize businesses to keep workers on the payrolls. The first one, the Employee Retention Tax Credit. If an employee is kept on the payroll, you can take the tax credit on your employment taxes, on your payroll taxes for that employee for what you spend on their wages, with a cap of $10,000 per employee. The great thing about this credit is that it is fully refundable, which means that if your tax credits are more than what your tax payments are going to be to the government for the year, you're going to get a check back from the government for the difference. The one qualifier on this specific credit is that you're going to have to show that your gross revenue has declined by at least 50% compared to the same quarter of last year. So we've had some clients where in the first quarter of this year, it looked like their revenues were going to decrease because of coronavirus, but they hadn't yet. So they weren't going to be able to take the tax credit on the first quarter of this year. But now that we're in the second quarter, they're going to be able to do that because their business has decreased so substantially. So it's another great option for businesses. And then the final one, before I turn it back over to Tom, is the deferral of employer payroll taxes. And this, along with the other one I mentioned, they're not for people who are applying or who received the PPP money. That's mainly to avoid double dipping. The government wants you to get free money, but they don't want you to get too much free money. So for this one, you can defer paying your share, the employer share of the payroll taxes for 2 years. You don't have to. It just gives you some additional time if you need to spend the money. If you want to spend the money instead on other things like rent or utilities or keeping people on payroll, you can defer those payments and buy yourself some more time. So I know I've seen this thing pop up with a ton of questions since I started talking, but I think we're going to let Tom go, and then we'll come back, and I'm sure we can do those questions in a minute. So yeah, Tom.
I'm almost reluctant to go because I know Scott had the fun part, the money part, and there's probably so many questions. And I don't know, Congressman Malinowski, if you want to comment on anything that Scott said. If not, I can get into the employment stuff.
Go ahead. I mean, everything Scott said was totally wrong, but we'll just let it slide.
Yeah, and let me just say too, Bob, hopefully we can figure out a way to put this deck up on the DWC website, or
for sure
in any way get it to people who want it.
Yeah, for everyone attending, we now have a business resources tab on our website, and we have documents and resources that folks are looking for on the site. So we'll put this up there as well.
Okay, so I'll just briefly talk about the employment stuff because there certainly are a lot of questions these days about that. But before I do that, just a note on the PPP and the EIDL programs. As Scott said, as you probably read by now, they are incredibly generous programs. The government is basically paying you to keep people employed. And so it's paying your employees for you in effect. So think of it in another way. If you laid off your employees, if we all laid off our employees, the already historically high unemployment claims would just be through the roof, and that would wreak havoc on each state's unemployment system. So this is Congress's way, I think, of making sure that doesn't happen, making sure the unemployment system isn't overwhelmed and that you keep your employees employed. So even before Congress acted to provide stimulus through the Paycheck Protection Program and the EIDL, it first acted to protect workers through the Family First Coronavirus Response Act. So this is a law that was signed by the president on March 18th, 2020. It went into effect on April 1st. And essentially it provides a few different things, most particularly paid leave for employees, but it also establishes free coronavirus testing. It supports state unemployment benefit programs. It expands food assistance for vulnerable children and families, and it protects frontline health workers as well, and provides disaster relief for states. So why is this law important to you and your businesses? Yeah, just on the prior slide, just a note before I get to the specifics of the FFCRA. A lot of states and local jurisdictions even have their own paid sick days and family leave laws, which may be in addition to these new federal requirements. So for purposes of this discussion, I'm only talking about the federal law and to a certain extent, New Jersey law, which of course already provides a form of paid sick leave to employees. All right, so we're on a situation where I'm sure productivity is probably way down, probably sales are way down, maybe delivery dates of goods are being severely delayed, and maybe even payments are coming in slower than normal. So the question becomes, what am I going to do with my employees? Can I lay them off? And of course, the answer is yes. Of course, you can lay off your employees if you need to. Although given the PPP program and the EIDL loan program, maybe that's something that you don't want to do at this point. So then the question becomes, if I keep my employees, do I need to pay employees for not working? So first of all, if you're working from home, if you're teleworking, that's still working. So just because your physical office is closed, I know this seems obvious, your employees are still employed. But the answer of whether you have to pay people for not working is generally no. However, the answer is yes in 6 circumstances under the FFCRA. First, the employee is subject to a federal, state, or local quarantine or isolation order related to COVID-19, and I'll get back to that in a second. Second, the employee has been advised by a healthcare provider to self-quarantine because of the coronavirus. Third, the employee is experiencing symptoms but hasn't yet received a positive diagnosis. Fourth, the employee is caring for an individual subject to a quarantine order. Fifth, and I will go into some detail on this, the employee is caring for a child or children if schools are closed, subject to an emergency order, or their caregiver is unavailable because of a public health emergency. And then 6 is basically a catch-all that allows the Secretary of Health and Human Services to define other circumstances when paid leave is required. So regarding the first one, employees subject to a federal, state, or local quarantine order, the fact that New Jersey has in place a shelter-in-place or a stay-at-home order doesn't mean that you have to pay your employees not to work. Most states at this point, almost all of them, have now mandated that non-essential businesses close and that its citizens stay at home. But the official guidance from the U.S. Department of Labor, and excuse me for quoting it, says, if your employee closes after the FFCRA's effective date, even if you requested leave prior to closure, you will not get paid sick leave or expanded family medical leave, but you may be eligible for unemployment insurance benefits. This is true whether your employer closes your work site for lack of business or because it was required to close pursuant to a federal, state, or local directive or an emergency order. The first circumstance, just because you are ordered, non-essential businesses were ordered to be closed to the public, does not mean you're entitled to pay leave under the FFCRA. But if any of these circumstances do apply, you do have to provide paid leave. I do want to make a note too about the fifth one, caring for children if schools are closed. When this law was drafted, which was somewhere in the middle of March, it was not at all typical that schools across this country were closed. Now it's probably the rare case that any schools are open. So I don't think Congress really thought that one through when they passed the law. So it is entirely possible, at least under the terms of the law and the Department of Labor guidance, that an employee can come to you and say, I'm not going to work because I have to care for my child who is home from school, but I still want you to pay me. Fortunately, though, anything you pay to an employee who may say that, anything you pay to any employee under the FFCRA who takes paid leave will be reimbursed to you dollar for dollar in federal tax credits. So all the money that you pay out in required paid leave comes back to you as tax credits. So who does the FFCRA apply to? It applies to all employees, whether or not they're full-time, part-time, hourly, whatever. There are no minimum days or hours of employment that they have to work. Part-time employees can get a little bit complicated. You have to determine their paid leave under the FFCRA based essentially on the average number of work hours in a 2-week period. But again, these are complicated calculations with respect to the part-time employees. If the person has a varied schedule, if they don't have a set part-time schedule, you have to do the calculation based upon a 6-month average in order to calculate their average daily hours. So it can get a little bit complicated with respect to that. So what's your obligation to pay these employees if they take required paid leave under this new federal law? If they qualify for leave for qualifying reasons 1, 2, or 3, that is, they have the virus or they're quarantined because they're suspected of having the virus, your obligation is to pay them 2 weeks of pay at their regular rates of pay. If they are taking leave because of reasons 4, 5, and 6, that is, they're caring for someone who's sick or is suspected to be sick with the virus, or they're caring for children home from school, then you have to pay them at 2/3 the employee's regular rate of pay. But in all circumstances, pay is capped at $511 per day, or $5,110 in the aggregate for qualifying reasons 1, 2, and 3, and $200 per day, or $2,000 in the aggregate per person for qualifying reasons 4, 5, and 6. So the other thing you should know is just like under the FMLA and New Jersey leave laws, you can require, if you want to, you can require employees to apply their paid time off or their vacation time against their FFCRA leave. But just a caveat about that, some state laws and some contracts, if you have them with your employees, may prohibit this. So you have to be careful to check that first. On the wage and hour stuff, a lot of questions still from people we're getting on whether employees can collect unemployment if they're laid off as a result of this. The answer is a resounding yes. If you need to lay them off, do so. Tell them they should immediately apply for unemployment. Whether you should lay them off, again, given the PPP benefits, is another question. There was a question about whether or not if people, if their hours aren't reduced but their pay is reduced, can they apply for unemployment benefits? They're not likely to get unemployment benefits if their pay is reduced. However, if their hours are reduced under New Jersey law, you can apply for unemployment and get proportionate unemployment because of that. So one final note, just briefly on the FFCRA, there is an exemption which could seemingly swallow up the rule. And it's an exemption for small businesses with 50 or less employees. If a business can demonstrate that providing paid leave under the FFCRA jeopardizes the company's viability as a going concern, then they can apply for an exemption under the FFCRA. However, this exemption only applies if the leave is requested because the child's school or place of care is closed, or because child care is unavailable. And the definition that the U.S. Department of Labor has given with respect to jeopardizing the company's viability is quite stringent. So I'm not aware of yet anyone trying to take advantage of that exemption, but you should probably assume that that exemption will be pretty narrowly construed by the Department of Labor. So I ran through that pretty quickly, but I know we've spent a lot of time so far, and I know probably we'll want to get to some questions, Bob.
Thank you, Tom, and thank you, Scott, very much for your excellent presentation. We are now going to get to questions. I'm going to ask two general ones because there have been a few questions about these two different topics. Actually, the first one is really addressed to Mayor Brindle, or should be addressed to Mayor Brindle. There are a lot of, we're starting to get inquiries, and there were some here from landlords who are asking about, commercial landlords, who are asking about property tax relief. And they want to know what might be available, if anything, regarding their property taxes. So, Mayor Brindle, I thought you would be the best person to address that, that question.
Thanks, Bob. And yes, it's one I'm getting quite frequently, both from residents and commercial landlords. And hang on, I'll let you see me. So yes, unfortunately, that's not something over which the town has jurisdiction to determine what the when and any extension of property tax deadline. As you know, the current one is May 1st. We offer a 10-day grace period, which is the maximum allowed. But there is legislation currently being discussed in Trenton right now to see what we can do about it. But the reality is, the municipality is the tax collector for all services, and we have to pay the school district and the county first. And you can imagine if we extend or enable a long-term extension of the property tax deadline, what it does for cash flow, not only for the town, but also for schools and so forth. So we're waiting on guidance from the state on that, which we should get this week. But it does create significant concerns regarding, how we pay our teachers and our police and our fire if taxes are extended in any significant way. So we're waiting, and hopefully we'll have something to hear this week. And I don't know if Tom, if you've got an update on that.
No, not yet.
Yeah.
I'm waiting.
So, but it's tricky. It comes out. It's cash flow, and to be quite frank, I think probably the best we could expect is an extension of the grace period for a period of time. I don't think that the notion that it'll be extended months or, certainly won't be skipped. But I don't think an extension of months is probably something that they can contemplate, because it creates just significant cash flow issues across the board in terms of being able to keep any type of government functioning. But everybody is very well aware of the concern, and we'll see hopefully this week about what's being proposed and passed.
Great. Thank you, Mayor Brindle. We did get, for the Congressman, we did get another person mentioned, Santander Bank. So obviously there's issues with them. So we'd appreciate you and your office looking into that to see what we can do to get those applications started.
And Shelley, I'll just add one comment that I got, just props to Tom and Scott. There's a business owner here who actually texted me and said that he's been on 4 of these, and this was the most well-organized and understandable and decipherable that he's attended to. So thank you very much to you guys for participating and offering that presentation today.
Thanks for asking. Thank you.
Yes, thank you, everyone. So people are asking about specific banks in town. Are there specific banks that people should go to? Congressman, I know that I believe when this bill was drafted, it was not intended for business owners to have some sort of banking relationship with a bank. I thought it was supposed to be more open-ended, where you could go to an SBA approved bank and apply for a PPP loan.
That's correct.
Right, but that's not what's happening in practice.
That's
So
what's happening. Yeah.
So is there anyone on the panel who can make recommendations for folks who are still having trouble with, accessing a bank for these loans?
I mean, I would say that, as I mentioned before, community banks are generally better than larger banks. Bank of America, though, has been pretty good, but you'll have to be an existing Bank of America customer. We have some recommendations for some small banks that can help non-customers, but I think it's probably better if we talk to those people that need that information off the video chat. That way we can find out more about their specific situation.
Okay.
So if you want to send us an email, then I'll put our emails up real quick here. Then we can connect you with some small banks that can help.
Excellent. Thank you. Yeah, Liz Jeffrey is just saying that she's our economic development consultant in Westfield. She's been on too many calls and read many summaries. The deck provided by Tom and Scott is best he's seen. So Tom and Scott, thank you for that. Here's a question. I'm just going to go through as many of these as we have time for, but hopefully we'll have time to answer them all. Paul asked, he's been in business in town for 30 years, has Bank of America account through which he pays his employees. This account has been transferred from bank to bank as they have been bought out. But apparently Bank of America has certain rules as to what characterizes a business account and credit line. So they won't even let him apply for a PP loan to rehire his staff. He's tried other banks, but he doesn't have a banking relationship with them yet. No one is manning the phones, and there's no one to speak with. This is his payroll account. What can he do?
Well, I think my first question would be when exactly the application was first filed, just because I know that they've significantly reduced the limitations in place for people to apply for Bank of America since, I believe it was Saturday, maybe even Sunday when they started reducing the limitations. So if the application has happened since then I would say that you should get in touch with us and we can connect you with another bank that can help. But my understanding, just not a bank, so things may be a little more complicated. But my understanding is that Square and PayPal are going to be approved today at some point, and they will not have any of those requirements to do it. So that's a good place to start. But if you want to work directly with a bank, then you should definitely get in contact with us, and we can pass along your information to another local community bank.
Excellent. Thanks, Scott. And Tom and Scott's email is on the screen currently. So,
and Bob, sorry to jump in.
Sure, go ahead.
I'm scrolling through the questions, and there's so many questions about, I'm a part-time yoga instructor.
Yes. Sole proprietors.
I'm the sole employee of my business, or I'm
That's right.
Proprietor. So I think Scott addressed that, but Scott, can you address that again? Because so many questions.
A lot of questions about that.
Yeah, that's fair. Yeah. So if you're an independent contractor, you're a sole proprietor, you're the only person in your business, your applications for the Paycheck Protection Program are going to start this Friday. It's going to work the same as it will work for all the other businesses that have been applying. If you don't pay yourself as a W-2 employee, what they're instead going to look at is if you've been giving yourself a distribution, if you have a draw against your business account, if you just use your business account to pay for your personal expenses, they can look at that to help calculate what effectively your payroll costs are. That's a little bit of a gray area in how exactly if there are going to be any limitations on that, because the SBA has not provided guidance yet on how exactly to do that, and they haven't done that because it doesn't start until Friday, and they have other fish to fry in the meantime. But we're expecting it to be treated pretty much the same way, just not going to be quite as easy to you're not gonna be able to go to Paychex or Gusto and print out a quick report. It's going to take a little bit more math and going through your individual bank records to figure out the exact amount. But otherwise, it's going to be treated exactly the same as any other business. As that's for all 1099s, for independent contractors, for sole proprietors, for all of that. The only potential issue, I would say, for sole proprietorships and independent contractors is because the amount of money that you receive is based on your payroll costs, and it's in that situation it's just you. The amount of money that you're going to get is going to be somewhat limited. It may be enough to cover your expenses and obviously to pay you for your own quote unquote payroll costs. But if you do the math and you realize you need more money, then you should definitely consider applying to the EIDL program as well, just because that's much more expanded and that can offer a lot more money to a sole proprietor or an independent contractor.
Great. There was a question about Wells Fargo. Does anyone know what's going on with Wells Fargo? They haven't gotten their official application in.
So yeah. So when Wells Fargo opened their applications on Monday, there was a limitation in place on how much money in loans that Wells Fargo could give out. That was their punishment for the 2017 fake accounts scandal. It was imposed on them by the Federal Reserve. And between the applications, people filing applications all of a sudden, people liquidating their brokerage accounts because of what's going on with the stock market, within an hour or two, they hit their cap and their maximum of what they're able to give out and how the applications they were able to process. As of yesterday afternoon, I want to say about 2 or 3 o'clock yesterday, that cap has been lifted. So if you went to Wells Fargo, if you tried going to Wells Fargo on Monday or Tuesday this week and they told you, sorry, tough luck, we can't accept your application, you can go back now and they should be able to accept your application now.
Great. Thank you, Scott. How long should it take for the banks to get back to the businesses after they initially apply for PPP?
That is an impossible one to answer, I think, because it's going to very much depend on your bank. I have some clients with Chase that applied on Friday when they start taking, I'll call them small form applications, and they still have not heard back. Whereas I have other clients with other banks that have heard back within a couple hours. I would keep in mind that most of the people that you can be working with at these banks probably have a call list of 500 clients or more. So you're going to need to be somewhat patient, but realistically, you should hear back within a few days. I'll say 3 to 4 days, so at least the first contact back from the bank. If not, then you should proactively do your best to get in touch with the bank or a specific contact at the bank if you have one.
Great. Thank you, Scott. Liz Jeffrey had asked, do we have a list somewhere of approved 7A lenders in the Westfield area?
I don't have one, but I know that the SBA one has one available on its website where you can do searches. But keep in mind that this is basically any bank. Actually, basically every bank is capable of doing it. Whether or not they actually are is a different question. But I don't have a specific list of Westfield specific businesses.
Right.
That's a good idea, and I may take that.
All right, great, excellent. Let's see if we can put something like that together for everybody here in Westfield. This was for Paul. Questions regard to the NJEDA small business emergency loan open on April 13th. Will the application be denied if the applicant has no W-2 employees, part-time or seasonal?
No, we are not. Well, that won't be a reason for declination, not knowing the credit and all that other good stuff, but that is not a mitigating factor in a decision.
Okay.
1099 employees are eligible to be counted into the mix, so it's not that would not be an issue.
Okay, great. Thank you, Paul.
Sure.
Are independent contractors eligible to be counted as employees under the PPP?
The employer should not count them when they're calculating their payroll costs, but the independent contractor can file on their own separately starting this Friday.
Starting tomorrow, right? Okay.
Tomorrow, Friday? Oh, wow.
Yeah, that's tomorrow. Yeah.
Time, how does it work?
Right. Do we need to file 2019 taxes to have the documentation for these programs? What's the point of moving the 4/15 date to July? Well, I think moving the 4/15 date to July is to give people are going through all sorts of issues now with these loans and grants and what have you. So it's giving people more time to file their taxes.
Yeah, the only thing that you would need you might need your 2019 taxes filed for, or if you want to file for if you haven't filed a 2018 tax return, or your 2019 tax return has less than $99,000 and you want to receive one of the direct payments, just because you have to have either 2018 or 2019 taxes filed. But that's really the only thing that I'm aware of that you would need to file for in advance.
Okay, thank you. Next one. I have mostly, Miriam Silver, I have mostly hourly employees who work based on the work that comes in. If I get the PPP, do I pay them backwards, even if there wasn't work for them, or do I pay them moving forward?
You're gonna pay them moving forward for the 8 weeks following your receipt of the money. For the time that they spent for the back time, what they should be doing is filing for unemployment, and that way they can get paid for that for the time in between. But that's not going to be on you. You're not going to be held. It's not going to reduce your loan forgiveness if you don't pay them back. It's not going to have any effect on that. But they should definitely be, if they haven't already filed for unemployment, they should try and do so as soon as possible.
Excellent. Thank you, Scott. Is it acceptable when figuring out the requested amount for a PPP loan to get a number for monthly pay, not to exceed anyone's salary over $100,000, and then add health insurance and retirement contributions as well?
Yes, yeah, that's exactly what you should do. Some of the programs have already will already include some of those numbers if you've already if you've already inputted, let's say, your premiums into paychecks or whatever the program that uses. They may include it already, but realistically, you're probably going to have to add that stuff on top of it. So you may have to go to your whoever your group health plan provider to get those numbers, but yeah, you'll add that stuff on top of their actual wages and other compensation.
Excellent, thank you. Mandy Zucker asks, why won't my employer me one day each week instead of just reduce my pay by 20%? Couldn't I then get unemployment? What's the benefit for the business to do it that way?
I'm sorry, can you repeat the question again?
I think I answered that one before.
You answered that one, Tom, right?
Yeah, it would be better for the employee to be furloughed one day as opposed to their salary reduced.
Right, right. If I'm an independent contractor, realtor, and I have a full-time assistant, can I apply for EIDL through my company name or my own name?
I'm sorry, can you repeat the question one more time?
Sure. If I'm an independent contractor, this is a realtor, and I have a full-time assistant, do I apply for EIDL through my company name or my own name?
You can apply through your business, the company name. You need to have an individual just on their own can apply for the EIDL program. It has to be through the business.
Bob, I'm going to have to run now, so just wanted to thank you guys again for doing this. This has been very helpful and informative for me to hear the questions that folks have. I still have staff on the chat, so we'll see all the Q&A from this point on.
Great. Congressman, thank you so much for your time.
Thank you so much.
We are so appreciative.
If you want to, for time's sakes, Scott and I are happy to answer any questions people have by reaching out to us by email or even cell phone.
Yeah. Okay. So yes.
Shelley, I would say also maybe what we can also do is all the questions that have come online.
Yes.
We can scrub them and make them anonymous and just put like the Q&A with the answers up along with the website potentially. Yeah,
we totally can do that.
So
yeah, because people have been on for 90 minutes now, so I don't want to keep the panelists too much longer. So I think that makes a lot of sense. So we'll take all of these questions and we will get them answered anonymously. And we're going to ask people to check back on our website, westfieldtoday.com, in the next couple of days for all of these answers.
Now Scott has a lot of work to do.
Well,
What else is new?
yeah. Listen, I just want to thank all of you, Mayor Brindle, Paul, Congressman and his staff, Scott and Tom, and David, who had to leave earlier, for your time this morning and for really putting a lot of thought into this. This has been really, some of the comments you can see, this has been really, really helpful and instructional for a lot of people. And we will be making this video available on our website so that everybody can watch this at any time. And we will answer all these questions in addition and get those up on the website as well.
And Bob, so we'll have this presentation available as well, right? What Tom and Scott presented.
Correct. We'll have
Great.
their presentation deck on there as well.
And we'll also put it on our COVID-19 web page on the town website and link over as well. So we'll have it in many different places.
Terrific. All right, everybody.
Thank you, Bob.
Thank you so much.
Thank you.
Thanks,
Thank
everybody.
all of
Stay
you.
safe.
Have a great
Okay. Yeah. Stay home and stay safe.
That's right.
Okay.
Bye-bye.
Bye-bye.